Barclays reporting Q1 results this morning. The company disclosing a £228 million charge from its exposure to collapsed mortgage lender Market Financial Solutions. Joining us to talk about that and much more, first on CNBC, C.S. Venkatakrishnan, the CEO of Barclays. Venkat, it's great to have you back. Welcome.
Thank you, Sarah. Thanks for having me.
So overall, I mean, it seems like the results were pretty strong. You saw good revenue growth, except for some of these one-time exposures and issues. How would you characterize the overall environment right now?
Well, I think our results have been very strong. Thank you. It's another solid quarter in a progression of quarters. The investment bank continues to do well. All the divisions of the bank are doing well. Our ROTE is 13.5%. Our UK divisions are in the high teens, 20s. The investment bank's at 15%. So it's been a strong quarter. Volatility in markets has helped our trading businesses. But obviously, as you look forward and you see what's going on with inflation, potentially with oil prices, in the longer term, you've got to be worried.
Is that because you have a lens into the UK economy and it's going to hit worse than the US?
Yeah, well, so here's the interesting thing. The consumer and corporates, both in the UK and in the US, are still doing well. And they're doing well because they're able to absorb inflation. And so what we see is that today they're fine. And obviously, you've got to think about what it might be in the longer term. And that's what we keep an eye on. But otherwise, we've been confident in our performance, and we've reiterated our financial targets for the full year.
What about, I mean, the exposure to private credit, the fact that you did take this impairment charge, and how much more do you think is coming there? And are you being more cautious and changing the way you're thinking about lending?
Yeah, so first of all, this thing is not what we call private credit. It's securitized products. But we were lending to a mortgage originator. We suffered from a fraud. And we are absolutely being very cautious on lending to smaller companies with more vulnerable business models, especially in this area where we may not be confident about the quality and independence of their financial controls. More broadly, we continue to be committed to lending to small businesses and individuals in the US and the UK. In the couple of days, we are closing a transaction here in the US, the fifth largest direct-to-consumer lender, Best Egg, which originates about $12 billion in loans every year. And so that is a sign of our continued confidence in lending to our over 25 million customers here in the US.
I think you were wrapped up in the Tricolor bankruptcy as well, or issues, the subprime issues around that. I mean, where do you think this goes? How widespread of a problem do you see this?
Well, I don't know how widespread it is, but what is clearly happening is there have been 2 cases of fraud. We've avoided some others, like First Brands. But in a weaker economic environment, in business models that are geared to that, subprime, auto lending, in the case of Tricolor, there's vulnerability, and sometimes that vulnerability creates a temptation to do fraud. And we just have to be sure of the financial controls in these smaller companies, and it's very hard to be sure. So that's why we're restricting lending to them.